So I still haven't made any money day trading just yet. I have been paper trading for the past 3 months. I mean, I really haven't put money in for a while, but right now I'm feeling confident in my trading ability. I'm taking good trades. I am not being hesitant. I am okay with accepting my losses when I take a good trade, and I'm still learning, but I'm ready to start putting real risk in. I've been working a good amount, getting my money up, and tracking my income versus my expenses, so I can budget for this. So this is my plan to start scaling in day trading. Step number 1, prove to yourself you are profitable. You need to be confident in your ability not only to trade, but to psychologically handle the emotions of trading. Are you able to hold your trades? Can you hold it till it hits take profit or stop loss? Are you pulling it too early because you can't handle taking a loss? Are you having FOMO? You need to be able to be confident in your ability to control your emotions and also to trade and take good trades. Having a clear trading system. You know exactly what you're looking for when you come into the market. You know when you need to take a trade, and you know when you need to just sit there and do nothing and not take a trade for the whole day, not take a trade for the whole week sometimes. You know what you're looking for, and you're not going to take anything that is not that. And then I'd say at least a month of profitability. You want to show that you can make money over a longer period of time. Are you going to be positive in a month, in 2 months, 3 months? Showing at least 1 month of profitability is probably the minimum to show that you can do this over a longer time scale. So, step number 2, set correct and reasonable expectations. Have a clear plan. One payout will not change your life. Trading with real risk will invoke stronger emotions. Losses will happen. You are in this for the long run. You are not rushing, trying to scale. Be prepared for risk to increase and do not get fearful. So, my intentions are extremely clear with this. I know that one payout is not going to change my life. I know that this is going to take time to build up. I understand that when I put real money in, that I'm going to feel more emotions, and I'm going to need to be able to control those emotions. I understand that losses will happen, but I'm in this for the long run. I want this to be a career. I'm not just trying to get rich quick. And I know that the more money I put in, the more it's gonna hurt when I take losses. But I need to be able to control them, and I need to be able to not be fearful taking trades. I need to be able to take trades as if it's still paper money, because the trades are the exact same. Whether you're taking a trade on a $5 account, maybe you're taking $1 trades, versus if you're taking $5,000 on a trade. It's the exact same trade. The only thing that's different is your emotions, because you're emotionally tied to that money. So, step number 3, purchase a 50K evaluation. Do the smallest account size first. So now I have 2 stable sources of income, so I can pay for this without this 6350, like without it being too emotionally attached to me. Like that money doesn't mean that much because I've built up income to where I can lose that money without starting to panic. Trade as if it is paper money. Risk 1%. We don't want to hold this account for too long. So in my last video, or whatever the video was when I said that I haven't been profitable for 3 years, a lot of comments were saying how risking $500 is way too much. Risking 1% is way too much. The thing is, with these funded accounts, every 30 days you get charged $63.50. So why would I hold it for more than a month? Because regardless if I blow this account or not, I'm going to be charged $63.50 at the start of every month, or whenever I purchase it, after every 30 days. So I don't want to hold this for longer than a single month. So I will be risking 1%. The account should be passed with 6 RR total. So if I make 3 RR on the first trade, and then I lose 1 R, and then let's say I win 2 RR, and then I'm up 5 RR, and then the next trade I win 1 RR, then I should pass the account. If you blow the account, continue with the plan. Do not become fearful. You cannot be fearful trading these accounts. I understand that I can blow accounts. It's part of the game. I know that over a longer time frame that my strategy is profitable, that my ability is profitable, that my skills will carry me over a longer period of time. So I'm okay losing $63.50 on a 50K account. I have accepted that risk. I'm not going to be fearful. Start a Notion/Excel sheet to track expenses. So you don't want to just be throwing money away. This prop firm is a return on investment game. You're putting money in to eventually make a bigger return on your investment. So I would highly suggest to start tracking how much you're spending on evals. And then lastly, use AI to fully understand the rules. So let me pull up my chat with Grok. So firstly, I went through these 4 prop firms, MyFunded Futures, Apex, Alpha Futures, and TopStep, to see which one that I wanted to go with. And because of the $0 activation fee, and also you can get 50% off, I decided to go with MyFunded Futures. So from there, I had Grok go through the website of MyFunded Futures and gather all the possible rules that I would need. And then I had it basically sum that up as quick as possible. So now I have all the rules of the evaluation phase, so I'm not missing anything. And also I have all the rules of the funded phase. So I can reread over these if I need to. I know the rules. I'm not going to make any stupid mistakes. I know how much what the max amount of risk I can trade with. So 30 micros, even though I'm not going to risk 30 micros. And also this important rule right here. You have to trade once every 7 days or the account gets blown. So I would highly suggest you do something like this. Just go into ChatGPT, have it go over the website, and have it give you the rules for whatever prop firm you're using. So that's step 3. Step 4, pass an evaluation phase. Don't get emotional, stay calm. Be able to recognize your emotions. If emotions are staying regulated, continue to purchase challenges until you pass an account. So like I was saying, I have already accepted the risk. I know that my first payout with a 50K account is going to be $1,000. So yes, I don't want to be spending $1,000 to get that $1,000 payout, but I have accepted the risk. I'm okay spending $200 to get there because I know it's part of the journey. And I know that my system is profitable. Again, your system has to be profitable. You have to be confident and have conviction in your edge, in your skills, or this is not going to work. But I am confident in myself. So I'm going to continue to purchase evaluations until I pass. Next, after you pass the account, trade the funded account. Build a buffer. Risk 0.5% instead of 1%. If you see a confident setup though, you can risk up. So if I see something that I'm extremely confident in, something that I've seen happen over and over again in the market, I'm going to risk 1%. The first payout is at the most $1,200. That's the most that MFF lets you pull out. And you also need 5 minimum trading days. So you need to make at least $100. So my goal is to get to the $1,200 and then get the 5 traded days. So after I've got the $1,200, then I'm just going to risk very small amounts until I can get to 5 days. And I'm trying to get that payout as quickly as possible, pretty much. So the ideal situation would be I make $1,200 on my very first trade. Let's say I see a very nice setup. I risk 1%. I make like 2.3 RR on the trade. Bang. I have $1,200. So the next 4 days, I'm just going to be looking to make $100. I'm not going to be looking to go past the $1,200. I don't need to be trying to make $3,000 for my first payout. I just want to get my first payout just to secure the ROI. Make sure I'm making more than how much I've put in. So the more logical situation would be I risk $250, so 0.5% to get to $1,200. And then from there, I take a small win for the last trading day. Again, the point of this is just to get the payout. You're doing the minimum to get the payout just to secure your return on investment. Step 6. Once you are eligible for the payout, pay yourself out. From there, do not touch the account until that money is in your bank. You could trade the account. After you've already reached that amount, you could keep trading it. But you could also blow it. So why put that risk? You've already made it. You've already done the work. Don't try to risk more. It's not worth it. Secure the ROI. Don't try to make too much money on your first payout. It will happen later. Be patient. Also, something that I would suggest is create a new bank account for trading. Create a whole separate bank account so then you can separate the money you make for your trading versus the money you make for your real job. Think of it as a business account. We're going to reuse that money. We're going to reinvest that money back into the business. This is how you scale, by reinvesting. That's where the scaling happens, and that's where you make a shit ton of money. Too much psychological emotions will appear when merging trading money and real life made money. So if you're merging the money you're making by your real job and your trading job, then when you go to pay for bills and you go to, let's say, buy more challenges with the same account, I think it's just going to clutter your headspace too much, and you're going to feel more emotional. I think it's just smart to make a business bank account and to put your money that you make from payouts into there. Also, make a high yield savings account so you can put money aside for taxes. We'll talk about that later. But also, you'll make a savings account and a checking account in the same bank account. So the checking account will be to buy prop firms or other trading investments, and then the high yield savings will be for taxes. So we'll go over that right now. Separate funds from the payout. So this is the percentage that I've decided upon for my payouts. 10% will go to just paying myself out. So this will go into my bank account, my real life made money, like the money where it's going for my job right now. I'm going to put 10% into there. So it's going to be $120 for my first payout. Then 30% is going to go into a high yield savings account just for taxes. So I'm going to leave that money in there so I don't have to worry about it at the end of the year, because there's going to be a whole separate account where I can pay off my taxes, and I can also pay for a tax advisor. Then 60% goes back to reinvesting into the business, putting the money back to where you made that money. So then we can scale. So at first it's going to be $720 to reinvest back into the business. Then let's say I have a $500,000 account in the future. Look how much this money scales. I get paid myself $1,200. $3,600 goes to taxes. $7,200 goes back to reinvesting back into the business. From there, starting to scale. So we still have that first account, the first $50,000 account. I'm going to continually try to get 1 to 3% payouts and continue to split the profits in that way. And then I'm going to purchase 3 50K accounts at a time. And again, I'm going to keep doing it until I pass them. I've already accepted the risk. I'm not going to be fearful. I'm going to continue to buy sets of 3 50K accounts until I pass them and until I can get the minimum payout for them. So, even after buying 3 sets of 3 accounts, that's only $570, which we made $720 back to reinvest. So, this is risking from money that's already made from that, like, it's from the thing we already made the money from, so it's pretty much risk-free. Like, you've already put in $60, $120 from your own investment. Now this is just risk-free investing. Stick to the plan. Risk 1% on evals, get the minimum payout on those 3 accounts, do the same profit splits. Step 9, just stick to the plan. Continue to scale from those 3 50K accounts. Then you can go to 3 100K accounts. Then you can go to 3 250K accounts. The goal is to get to 1 million in max allocation. Having $1 million in prop funding means you'll get $100,000 for 1%. Wait, $10,000 for 1%. Wait. Wait, no, it is 100,000. Yeah, whatever. But stick to the plan. Continue the same profit split. Treat it as a business. Continue to review your emotional state. Do not quit your job. You need a stable source of income. Find another source of stable income within the trading niche or online. Trading income is extremely unstable. There's going to be some months where you don't make any money. There's going to be some weeks where you lose money. Trading, you need another source of income while you trade. Because you got to pay the bills. You got to pay rent money. You got to pay for groceries, all that stuff. So find another source of income before you quit your job. Step 10, funding a live account. So from there, we're going to put the money we make from payouts into a real live broker. We're then going to trade that account, trade the live account, and continue to scale and make more money. Continue to reinvest back into the thing that's making you the money. Also, start to invest from the long term. Intraday trading is very risky. Risking 1% is a lot of money when you start to scale into these high numbers. So start to put your money into index funds, into stuff that you believe in. But invest for the long term. Even crypto, not fucking meme coin. Hold on. Not meme coins in crypto, but you can invest in higher market cap cryptos like Bitcoin. I don't know about Bitcoin, but Solana, Avalanche, Binance. I wonder how much I'm going to cut this. Wait, cut that, do that again. Step 10 is funding a live account. From there, we're going to take our profits that we made in these prop firms, we're going to take the payouts, and we're going to put it into a live account so we could start to trade on a live account. That's the whole goal of this, is to finally get to a live account that is 7 figures funded, maybe 8 figures funded in the future. But that's the goal, is to get to a live account, because prop firms have a lot of stupid rules and they're pretty much trying to scam you, but you can play them properly and leverage your money correctly with prop firms. And also, we want to start investing for long term. Intraday trading is very risky. Risking 1% is a lot of money when you think about it. Start to invest for the long term. Invest in index funds. Invest in stocks you believe in that are going to go up over a long period of time. Invest in crypto even. Invest in the high market cap cryptos, not fucking meme coins, but invest in Solana, in Bitcoin, in Avalanche, in whatever. Invest for the long term. And that's it. Lastly, we're going to talk about ways to keep your emotions in check, because trading is the fucking same. No matter if you're trading on a damn paper account, on an account that has $10, or account that has $10 million, the charts are the exact same. The only thing that changes is how you feel about that money that you're risking, how you feel about how much money you're making. It's all in your head. So we want to keep our emotions in check. How do we do that? Like I said, create a separate bank account so your money is completely separated. Think of trading in R multiple or percentage, not dollar signs. So how much RR are you making on a trade? How much percentage are you making? Once you think about it in dollar signs, then that's when your head gets psychologically activated for that money. Take small steps. Don't be greedy. Do not quit your job. Find other enjoyable sources of income. Make a YouTube channel. Start a personal brand. I don't know. Do whatever you want, but find other ways of income, because trading is not a stable source of income. Think about how your emotions feel. Do not ignore them. You cannot just throw your emotions under the rug. You have to keep them in check, and you have to think about them. That's how you're gonna not overcome them, but that's how you're gonna be able to control them better, is by thinking about it. Do not fucking ignore them. Do not make emotional decisions. When you're feeling those emotions, maybe it's time you step away from the computer. Why are you sitting at your charts when you clearly have FOMO? When you clearly can feel in your chest a tightness, and you're feeling rushed and tense, and you know that you're feeling that FOMO. Why not just step away from the computer? Because trading is always going to be here. The market is going to open the same time the next day. It's going to open the same time the next week. Be able to step away if you need to. Also, understand when you need to de-risk. Maybe when you take a trade, you're starting to breathe heavily. You're not panting, but you're feeling rushed, and you're scared, and you're wanting to close the trade quickly. Know when you need to de-risk. And that's it for this video. This is how I plan to scale in day trading. I understand that it's not going to happen super fast, but I know that when I stick to the plan, when I believe in my abilities to trade, and when I have another source of income, that this will happen eventually. I believe in the long run, I'm in this for the long run. I'm not going to try and force anything. I know it's going to happen eventually. So that's it for this video. I hope you gained some value out of it, and believe in yourself. It'll happen for you eventually. Just don't quit. The only way you fail is by quitting. But thank you for watching. I hope you enjoyed. Leave a comment, like the video, and subscribe, and I'll see you in the next one. Peace out.